you're just filing on your personal return, right? What's that? Okay. S corps, anyone? LLCs? One. Okay. Okay, good. This is probably this is the one where most people are located right now. Once you start making good money, this is the one that's going to help you. We're going to talk a lot about S corporations today. Are most of you just starting out, or have you been in Posh a while?
2 years.
Okay. All right. We're not going to spend a lot of time on liability. When clients come in to me, they're concerned about two things. What if I get sued, and how can I pay less tax? And so today, I don't think liability is a big issue, so we're going to talk mostly about tax. Just for your information, sole proprietors have no liability protection, which means if you ever get sued, your personal assets are at risk. Okay? As an S corp or an LLC, they are not. So if you were a construction company, I would say even if you're not making much money, it would be a good idea to incorporate this for liability. With you ladies, probably not too big of a deal, just because I don't see a lot of risk with what you're doing. Once you do incorporate, you must act like a corporation. Even as sole proprietors, ladies, I would recommend you set up a separate bank account for your business. And now I know that you don't want to do that. But here's the reason. If you get audited by IRS and they want to look at the very first thing they ask for is always bank accounts. And if you have your Posh business mixed in with your personal, guess what they get to see? Everything. They get to see how much you spend on groceries, how much you give in donations, where your kids go to school. They get to see your whole life, and I've been doing this for a long time. That's the last thing we want to do, is let the IRS see any more than they need. Based on the state you're in, you may be required to keep corporate minutes once you incorporate, which isn't a big deal. Now, let's talk about tax. This is the big deal. It's tax season right now. So, when we talk about profit from your business, we're talking about not what your 1099 says from Posh. We're talking about your 1099 less your expenses. That's profit. Okay? Now, once you start making pretty good money from your business, you can see in this column we have sole proprietors, which most of you are, and LLCs, and this column S corps. On $50,000, you can see federal and state tax doesn't change. But look down here, it's what's called self-employment tax. What is self-employment tax? Any of you know? How many of you work for someone and get a W-2 wage? Few? Okay. I'm gonna pick on this young lady right here. So every 2 weeks you get paid, and they take Social Security and Medicare out of your check, don't they? The company that you work for then has to match that amount, and all of it gets sent to the federal government. Okay? Now, if you add up those percentages, which you probably never have because none of us do, what they take out of your check and what your company matches adds up to 15.3%. But when you're self-employed like you are now, guess what? You get to pay the full 15.3%. So on 50 grand, that's almost $8,000. On 25 grand, it's almost $4,000. So it's a big amount. And you can see as an S corporation, it's almost cut in half. So here's the deal. Once you get to about 20 grand of profit from your Posh business, you are ready to do this. Okay? Now, you have to incorporate in the state in which you live. What does it cost? Never thought you'd never ask. What it costs to incorporate, if we do it for you, is about $500. And then you have to pay a filing fee in the state in which you live. So you can see that the tax savings here is about almost $4 grand, and all it costs you to do that is about $500, maybe $600 with the filing fee. unless you live in Texas. Anybody live in Texas here? Everything's bigger and better in Texas.
Fantastic.
Filing fees are too.
I do mine.
In Utah, the filing fee to incorporate is $70. In Texas, it's $300. Fantastic. It's still worth your money though. Still worth your money. So, if you don't remember anything else, ladies, remember when you reach about 20 grand of profit, you need to start thinking about an S corporation because it will save you tax. Yes?
I just had a quick question. We have a lot of military spouses. So is that home of residence or where you're living at with your husband?
It's where you're living, because that's
Okay.
where you'll incorporate. So
And
your state of
then-
domicile, it's where you're living at the present time.
Okay.
We do a lot of military, and they're interesting because they move you a lot.
Yeah. Yeah, a lot.
You do. Yeah,
Okay.
it's hard.
So
It-
would you have to be like citizen of that state?
Yep. So we had a military family, they incorporated in Colorado, and then they moved to Texas, so we had to reincorporate them in Texas. They were there for about 5 years, but now they're in North Carolina, and so we just incorporated them again, so they've done 3 corporations.
So they're all separate?
Yes. Yeah, unfortunately they are. Yeah.
So when can you do that? You know, files from this corp, like, what if I go to 1099 and I'm going, oh crap?
Well, you're too late to do it for 2015, but if you expect to make more than 20,000 profit in this year, you should incorporate right now.
Okay.
Yeah, yeah. Now, it will make a difference who you go to incorporate. We have an attorney down the road. Any lawyers here? Excellent. This lawyer down the road charges $2,500 to incorporate someone, so be careful, be a little careful with that.
What is that?
We've charged $500 for 15 years now, so I don't know what the average is.
So you have to go for an attorney or through a, like legal tradition?
Well, the H&R Block can't do it for
So
you.
you have to go through like.
A CPA or an attorney or something like that. You'll probably pay less money with the CPA than you will an attorney. So, S corporation, big deal, big deal. Okay, lots of questions about how you keep your stuff organized, because you're going to have a lot of stuff. Now, we recommend QuickBooks Pro. There's a lot of software put up by QuickBooks. You just need QuickBooks Pro. You do not need QuickBooks everything, okay? QuickBooks Pro is a couple $100. It's pretty simple, it's inexpensive, pretty easy to use. If you run into trouble, we can help you in our office. I can't, I'm no smarter than you are, but one of my boys is. Okay, let's talk about something that we get a lot of questions on. We have clients call all the time and say, well, I just bought a laptop computer, or I just bought a truck, or I just bought a car, what can I do? Under section 179 of the Internal Revenue Code, there's a lot that you can do. And what I mean by that is, let's say that this young lady, let's say that you made $40,000 profit in your business this year. If you, for 2016, if you went out and you bought, let's go to this next slide, if you bought a sport utility vehicle with a gross vehicle weight of over 6,000 pounds, you could write off $25,000 of the cost of that vehicle in 2016. So if you go out and buy a Denali, a Yukon, a Tahoe, BMW X5, Lexus 470. Everybody makes one. In fact, Mercedes made a vehicle about 4 years ago, and guess what the gross vehicle weight of this Mercedes SUV is? Keep in mind, it has to weigh that much? 6,005. Gross vehicle weight. Why do you think they made that vehicle? For us. For us. So that's a pretty big deal, but you have to have profit in your business. So if you're just starting out and you don't have a lot of this won't help you right now, but it'll help you down the road. Right now, let me just go to another slide and we'll come back to this one. Right now, where is it? Oh, I thought it was the next one. You're going to want to use mileage logs. So, for example, if you're driving a Toyota Camry, the way you can deduct automobile expenses is keep track of your miles. Okay? And let's say you use your car 70% of the time for business, you can write off 70% of your miles for that day. So if you put 10,000 miles on your car and you use it 70% of the time for business, how many miles can you